Hello students of grade 10. Welcome once again to our office administration lesson on purchasing. In today's lesson, we'll be looking at purchasing and stock control. In our previous lesson, we looked at purchasing and how it helps in providing goods and services. Our objectives for today are to outline procedures for purchasing goods and acquiring services, and identifying and preparing documents used in purchasing goods and acquiring services. At the end of today's lesson, you should be able to explain the procedure for purchasing goods and acquiring services, identify the procedures for purchasing, that is, the 6 R's in purchasing, and identify the documents used when purchasing goods and acquiring services. Let us begin. Procedures. Like individuals, businesses and organizations need to purchase goods and services to meet their needs on a regular basis. And also, like individuals, businesses absolutely need a formalized purchasing process if they want to extract maximum value from every dollar they spend. The way in which a company develops and implements its purchasing plan can have a major influence on not just expenses, but the business's overall competitive performance, its profitability, and efficiency. Here on my screen, there are 9 essential steps for purchasing and acquiring goods and services. 1. Need for goods and services identified. 2. Purchase requisition created. 3. Purchasing order review and approval. 4. Request for proposal, also known as the RFP. 5. Contract negotiation and approval. 6. Shipping and receiving. 7. Three-way matching, accounts payable. 8. Invoice approval and payment. And number 9. Accounting records update. Needs analysis. At this stage, the company recognizes and documents a need for goods and services to solve particular problems. The procurement team describes the need to be met and works with others to determine how best to do so. For example, a company facing high travel expenses might invest in more fuel-efficient company transportation for its sales staff, or reduce the amount of travel required for remote employees by investing in an advanced telecommunication software. Purchase requisition to purchase order. The purchasing portion of the purchasing process kicks off with a purchase requisition submitted to the purchasing department or purchasing manager by an individual, team, or department requesting the goods or services. The purchase requisition contains full details on the items or services to be obtained. Purchase requests established budget thresholds updated to purchase orders and submitted to the preferred supplier for that item or service. Expensive purchases or unexpected purchases not budgeted are forwarded for review and approved before they can be transferred to the purchasing orders. Rejected purchase requisitions are returned to the issuing party for review and correction or clarification as needed. Purchase order review and approval. Approved purchase orders are sent to accounting to verify the funds existing in the appropriate budget to cover the requested goods and services. Request for proposal. POs, or purchasing orders, that receive budget approval are returned to the procurement department and, as required, used to create requests for approvals, also known as requests for quotation, or RFQs. These are dispatched to vendors to solicit bids to fulfill the order for goods or services. Potential suppliers submit their bids and are carefully reviewed based on their performance history, compliance records, and important characteristics such as average lead times, reputation, and price. Contract negotiation and approval. The vendor with the winning bid is then awarded a contract, which is further refined before signing to ensure optimal terms and conditions and to ensure a manually satisfactory agreement for both parties. Once the contract is signed, the purchase order is a legally binding agreement between the buyer and the seller. Shipping and receiving. The supplier delivers the goods or service within the agreed upon time frame. Once they've been received in the case of goods or performed in the case of services, the purchaser carefully reviews the goods and services to ensure they've received what was promised and notifies the vendor of any issues. Three-way matching, a cornerstone of spend management. Three-way matching is the comparison of shipping documents, packing slips with the original purchase order and the invoice issued by the supplier. This comparison is used to ensure all the information related to the transaction is correct. Discrepancies must be rectified as soon as possible to avoid additional charges, delays in production and payment, or damage to suppliers' relationship. Invoice approval payment. Successfully matched orders are approved for payment. Any modifications or additional charges may require another layer of approvals before payment can be issued. Once approved, payment is issued to the vendor. Accounting records update. Completed records are recorded in the company's books, and all documents related to the transaction are securely stored in a centralized location. Question: if a good or service is required that was not budgeted for, what should be the procedure for ensuring it is catered to? Unexpected purchases or services not budgeted are requested via requisition form, and that is correct. The requisition is then forwarded for review and approval before they can be transferred to the POs or purchasing orders. The primary benefit of a formal process for purchasing is avoiding waste due to fraud, rogue spend, theft, and other financial pitfalls that accompany undocumented, non-optimized buying habits. Formalizing and optimizing the purchasing process is very important for 1. Creating an efficient and effective buying process for not just direct spend, example raw materials, but indirect spend, office supplies, IT services, etc. 2. Successful supplier relationship management. 3. Optimal supply chain management and strategic sourcing. 4. Streamlining the procurement cycle and all its sub-processes. 5. Providing a solid audit trail for internal and external review. And 6. Establishing a model for business process management. The 6 major principles of purchasing are right quality, right quantity, right time, right resource, right price, and right place. Right quality. The term right quality refers to the suitability of an item for the purpose it was required. For producing the goods of best quality, the best grade of raw material may be the right quality, whereas for producing items of medium quality, the average lowest grade may be the right quality. The quality of the item is called as grades. It can be measured by physical tests, chemical analysis, or by any other methods depending upon the nature or nature of the product. The use of standard specification, brand name, and trade name helps in purchasing the squared qualities for materials. The quality must be built into the product. It is the duty of the purchasing department to ensure that materials are purchased from those suppliers. Right quantity. Materials purchased should be of right quantity. The right quantity is the quantity that may be purchased at a time with the minimum total cost and which obviates or alleviates shortage of materials. Ensuring and maintaining a regular flow of materials for carrying the production activity is the vital aim of any purchase organization. Excess purchases should be avoided. It results in overstocking, and capital is the unnecessary block, and inventory carrying costs goes up. Economic order quantity such as EOQ helps in determining the right quantity of material to be ordered. It is calculated by applying the following formula. EOQ is equal to ACS. A stands for annual consumption of materials. C for cost of placing an order, and S for annual storage and carrying costs per unit. Right time. The time at which the purchases are to be made is of vital importance. In case of items used regularly, right time means the time when the stock reaches the minimum level. The reorder level of material is fixed for each item under the principle of right time. Action for the purchased supplies must be immediately initialed when material reaches the reorder level. Reorder level for each type of material is calculated by applying the following formula. Reorder level is equal to maximum consumption multiplied by maximum reorder period. The Materials Control Department sends the purchase requisition to the Purchase Department to purchase all materials. In case materials are required for special jobs, the Purchase Department ensures that the materials are delivered in time. Right source. Selecting the right source is an important consideration in the purchase procedure. The right source for the procurement of materials is that supplier who can supply the material of a right quantity and right quality as ordered at a right time at which the materials were required to be supplied at an agreed price with the supplier, who is in a position to honor the commitment without much follow-up, who has necessary financial resources and adequate manpower to handle the order, and who is well established with higher reputation and proven business integrity. The source of material should be located within a reasonable distance from the buyer's organization. This will minimize the delivery delays, higher transportation charges, and improve the personal contact between the buyer and the supplier, and enable better after-sales services, etc. Right price. Determination of right price is a difficult task. It is the main objective of any organization to procure the material items at the right price. It is that price which brings the best ultimate value of the money invested in purchasing the materials. Deciding the right price of a product depends on a variety of factors. viz. Quality, delivery time and ultimate life of the material, demand and supply curve, extent of competition, government restrictions, after sales services, discount offered, and terms of purchase, etc. Determination of proper price depends not only on market knowledge, but also a clear understanding of the pricing process. The buyer must consider whether a proposed item to be purchased represents the best value for money or not. This is known as value analysis. Right place. Besides obtaining the materials of the right quantity and right quality from the right source at the right price, it should be ensured that the materials are available at the right place. Transportation and material handling costs are greatly affected by the selection of the right place from where the materials are to be acquired. For minimizing these costs, selection of the right place for the acquisition of material is of utmost importance. If local as well as outside suppliers fulfills these conditions, the former should be preferred. The above-mentioned principles of purchasing can be summed up as the 6 R's of purchasing. These are also known as the essentials to be followed by the purchasing executive. Question. The right quantity of supplies is the quantity that may be purchased at a time with the minimum total cost and which avoids shortage of materials. The formula to use when determining the inventory reorder is the EOQ. True or false? If you indicated true, that is correct. As was mentioned before, EOQ is the ideal order quantity a company should purchase to minimize inventory costs such as holding costs, shortage costs, or order costs. The EOQ formula determines the company's inventory reorder point. When inventory falls to a certain level, the EOQ formula, if applied to the business process, triggers the need to place an order for more units. Documents to be used are requests for proposal. The request for proposal is a formal document which is used by the buyer to clearly specify their purchasing needs and the supporting requirements which will enable prospective sellers to understand the needs of the buyer. Request for quotation. This is a formal document which is used to specify clearly the requirements of certain purchases and requesting for a price quotation. Invitation for bids. The invitation for bid is a formal document which is used for inviting potential bidders to come and participate in the bidding process. Requests for information. This is used to seek information on various aspects from the prospective bidders. Requests for bid. Requests for bid is used to solicit financial bids for specified purchases from a selected pool of suppliers. Purchase order. A purchase order can be raised favoring a supplier for regular purchases. Generally, an organization will have a list of selected and preferred suppliers with a master agreement. Contract of agreement. A contract of agreement is a legally binding contract which will have an offer and acceptance and sufficient consideration for both the buyer and the supplier. Seller proposal. The seller proposal is a detailed offer from the seller in response to the buyer's request for proposal or buyer's request for quotation. Question. What would you say is the difference between the RFI, RFQ, and RFP? RFI is known as the request for information. It educates. RFQ means request for quotation. It quantifies. And RFP is request for proposal. It compares. Now that we've come to the end of today's lesson, here is the exercise that you are to complete in your notebooks. Number 1. Suggest 3 factors each influencing the selection of purchasing procedures: urgency of purchases, cost of items to be purchased. Explain one of each. 2. Describe in your own words the following duties of a purchasing clerk. A. Preparing and processing purchasing requisition. B. Filing the purchasing records. And number 3. Design an RFP, RFI, or a RFQ for the purchase of office supplies for a newly opened centralized office. In no more than 75 words, why have you chosen that document? Thank you for paying apt attention. My name is Miss Nisha Bamfield, and we have come to the end of our lesson for today.